Hey, this is Sasha Evdokov, and thanks for joining me here for another episode of Let's Talk Stocks. Now, before we get going into this lesson, which is really going to cover the two methods of you getting results or staying profitable in the stock market. Really, there's two main ways. It's a convergence way and a divergence way, which we'll talk about in a second. But before we get there, I wanted to let you know that the book, The 20 Rules for Investing Success, that I have written, that's going to be for free, is out and available on Amazon Kindle. Now, because we just ran into a couple things, by the time you get the book approved, uploaded, and then you go ahead and schedule the promotion, there's a few days that go through that process because they review it, takes up to 3 days, and then you go ahead and schedule your promotion, which it can't be on that same day. So in either case, that book will be available absolutely free, especially for those of you on the newsletter list. I'll let you know exactly when it's going to be available on that Kindle promotion time frame. You basically get 5 days to have that book for free, and I would actually list it for free on Amazon if I could, but it's listed right now at the 99-cent price mark, which is the lowest that you can list it. So once that promotion kicks in, you'll be able to get it for free for those next 5 days, and then after that, I'll make it available on PDF format on our website that you'll be able to download it for free. Again, just something that I think you should look through, read through, study it. Even if you just skim through some of the rules and insights, just use it to your benefit. It's just my little way to say thank you. Thank you for being a part of the newsletter. Thank you for watching my videos, and just some more insight for you to continue to get to work, continue to learn, maybe open up your mind a little bit more. Now, if you want a little bit of a deeper study, if you want to go into some other rules and tips that I also have written a little bit more detailed of a book, go ahead and take a look at the book 100 Stock Trading Tips. And that book's going to go into some of the things that I've covered also in the 20 Rules for Investing Success, but it'll go into a lot more other ideas, a lot of other concepts, and just share with you some other interesting tips and insights for trading. So take a look at that if you want a little bit more substance of a book. All right, so without further ado, let's get going on this lesson. Now, this lesson is really all about two strategies or systems that you can use for your trading. Now, when I'm talking about systems and strategies, I'm not going to go into, let's say, the technical systems and strategies that you personally are going to use to create and execute a trade. I'm talking about the foundational level of a system or strategy. And the reason I say foundational level is because everything really stems from that foundation. If you have a house foundation and it's this wide, you can continue to build that house and you can continue to expand it, evolve it, and grow it kind of vertically. So the foundation kind of dictates what you could do. And even on a house that's, let's just say, this wide, you could still build out the foundation something along this line or level, and it'll still be fairly stable and still be okay. But once you start getting into a structure that's a little bit warped, let's just say it's maybe getting into this level and you have all this weight with a weak foundation, so this is our foundation. So when you have this weak foundation right here, all that is pressing down with the weight and gravity on it, and it really becomes unstable. So in this lesson, what I'm really going to be talking about and sharing with you, it's a simple lesson, is about this foundation, about these two core things, methods, systems, strategies, that you need to decide which one is going to work for you for your trading. And from this foundation, you can start getting into a lot of other structures, a lot of other systems. So you can start building and creating your own system, and it'll come up and create some fantastic new structure or architectural thing. And that's really when you get into specifics of your own personal trading strategy and system. But really, it all starts with the foundation. If you know and understand the foundation, then you can apply it to you and what works for you. All right, so what are these two methods or strategies to get these results? Well, I like to break them apart into, let me just call them, one is going to be convergent, and the second one is going to be divergent. Now, this is just a naming concept that I'm using in order to reference these strategies, these ways to get results, in order to explain them better, so that way you know which one I'm talking about. So convergent, really both of these refer to the thinking process, okay? So it's all about thinking, but convergent thinking, when things converge, is really all about inputting ideas and things into one area. And a lot of times when you're thinking convergently, a lot of times it's very fast. It's very quick. Okay, so you're doing things very fast and quick. Divergent thinking is more something like along the lines you have your main concept, but now your thinking starts to spread in the outward direction. Okay, so you're diverging. Okay, so it's a mathematical kind of thing. And this typically you're coming up with ideas and concepts, but then once you have these ideas and concepts, it's a little bit slower. It's a little bit more creative thought process. So how does this apply to the stock market? If you start looking at now your own trading, well, you can see already between a fast and a quick versus a slow and creative process, it's a lot different. They're both very different. And when you look at it in the stock market world, if you have a convergent-based strategies versus a divergent-based strategies, convergent strategies, you're looking at, let's say, when you're talking about your losses, so here if we have losses, you're going to have many losses, okay, on really many losses here, but then your wins are also you're going to have a lot of many wins, but both of these, when you're talking about convergence, they're small, okay, they're very tiny and they're incremental. So think of this as more as a higher frequency trading. So this is more like day trading, okay, so think of it that way when you're thinking about convergent trading strategies. Now, when you're looking at divergent trading strategies, this is a little bit differently. So you still might have many losses, okay? So you still might have a lot of losses that come in, but your wins are a lot larger, okay? Because you're more patient. They're a lot slower in the sense. So your wins become a lot bigger. So think of this as kind of the turtle, okay? So if I was to put an animal towards this, when you really start thinking about it, think of this as, your hare or the rabbit. And then this over here is more like your turtle. So the whole point really, or the premise, is to figure out what type of personality works and fits for you, because this is where you're going to generate results. A rabbit operates a certain way and a turtle operates a certain way. So you need to kind of evolve and look at yourself from the outer perspective and see, are you more of a rabbit or are you more of a turtle? Are you kind of looking to gain things slowly, and can you be more patient? So if we did a rabbit example, how is a rabbit going to trade? A rabbit is probably going to look at that screen, do a little bit of a trade. It's going to be one trade, and you might make, let's just say here, you might make $1 on that trade. So let's just say, for simplicity's sake, $1 movement in price. Then the next time you might make, let's say, 50 cents, and you cash out, you get your profits. Another time you might have a loss of, let's say, 75 cents. Okay, so you'll have a loss of 75 cents. So your trading is just constantly micro or minimal. Here, if you're on a turtle side, your profit and losses, you might still have that dollar, that 50 cents, that 75 cents per share, on that stock as far as your losses, and you might still have many of them, so it's very similar to the turtle. But then your wins are a lot larger. So on your win cycle, you might have a stock that goes up, let's say $7 per share, or $10 or $12 per share. So it's a lot different in the sense of the type of personality that you have if you're trading on a divergent style versus a convergent style. Now, can you use both types of strategies or systems? Can you use kind of something in between, in the middle? Yeah, absolutely, absolutely. So if you take something like this, and let's just say here at the top, here's our convergent and here's divergent. Doesn't matter if you flip it the other way around. But let's just say you have the extreme levels. And for you, you might actually be somewhere more in the middle. Okay, so it could be somewhere over here, it could be somewhere over here. You don't have to be the outlier all the way up here. You don't have to be the outlier all the way down here. You could be somewhere in this range and still, use your system, use your strategy, and be okay. Now, can you also have two systems or strategies? Yes, you can. You can have two of these. So you can have a convergent and a divergent strategy. So for example, on certain times, let's just say this is you right here, certain times you may use a convergent strategy, exceptionally convergent, very high frequency, very active in the markets. And then other times you may be very divergent, or you could have multiple positions on. Now for me, I like to separate accounts, and that way it keeps things simple. But really, when you do this, you have to really make sure you're understanding what you're doing, and when you do things, why you're doing what you're doing. I know that sounds like a mouthful, but you got to really understand what's going on beneath the surface and why you're attacking something, why you're doing a certain trade. So here on a convergent strategy, when would I personally do this? So looking at myself, maybe you can mirror or reflect some ideas, and maybe it works for you, maybe it doesn't. So when or why would I use a convergent strategy? When would I do this? Well, the time to do this type of strategy or system would be more when there's higher volatility. With higher volatility, stocks will move up and down a lot more. So with that movement, this is why professional traders love volatility. With that movement, it allows you to get into the stock somewhere over here, doesn't matter, and then later you can sell it on the pop, okay? Or you can short it somewhere over here, it doesn't matter at which peak, and then buy it back at the bottom if you're doing shorts. Now, other times you may do things that are more divergent. And when do you do this? Well, when volatility levels are low. So this one is when volatility levels are high. This one's when volatility levels are low. Now, volatility levels now would be contracting, okay? So they would be smaller. So what happens to stocks when volatility goes down? Typically, stocks move higher as volatility drops. And what happens when volatility pops? Well, typically stocks move down because volatility increases. That means more fear in the market, more whipsaw action, and that's why you get a pop in volatility as stocks drop. Whereas when volatilities drop, you get a slow rise. It's kind of like a slug, a turtle crawling up the mountain as that volatility drops, okay? Because you got to push something. It really comes down to a gravity effect. If you look at everything in the sense of gravity, in the sense of everything's pushing down from that ceiling, okay, there's energy that you need to push a stock higher. Just to hold something up, like let's say this marker, it's not very heavy right now, but just to keep holding it up for 1 minute, it takes a little bit of time. For 5 minutes, it takes a little bit of energy. 10 minutes takes more energy, 30 minutes, an hour, 5 hours. If I tried to hold it up for 10 hours, that amount of time requires much more energy. And that's what happens. You got to remember, it's all about energy. So if you're trying to hold prices at that higher point, it takes more energy. That means more buying has to come in. More buying, more buying, more buying, just to hold the prices. Just to hold the prices. Okay, so there's all that energy that's trying to push those stocks higher that needs to be inflowed into the market in order to keep those prices higher. So going back to the bigger picture, when you have something that's divergent versus convergent, you need to figure out which personality type fits for you more. Typically, most people would fit into one or the other. And I will tell you, for me personally, I'm more of a divergent strategy person. I don't like to be in front of the screens all the time. Now, I'll watch the screens, but I don't want to be too attentive to them. So I'd rather prefer slow growth, but stable growth, okay? Whereas here with convergent strategies, you get more compounding effect because you get to carry out your wins and then you take that profit and you reinvest it. But for me, that's a lot of energy that I need to use in order to make those profits. Whereas with divergent, I can simply just put on my trade, let it sit, let it marinate. It slowly works for me, take my profits, continue on to the next trade. So you need to figure out what works for you. The question is do I trade a little bit more on a convergent level? Do I do a little bit more high frequency trading, or do I do a little bit more fast and quick type of trading in volatile markets? Yeah, I may do that. It depends on the market conditions and how things look. But the core of my strategy, most of the time, but I'd say 80-90% of the time, I still stick to my core. What's working for me? What works for me? And that's the divergent strategies. They're slow, they're simple, but they work. And for you, you need to figure out what works for you. Are you more of, a patient person? Because this one requires a little more patience, whereas with Convergent, requires a little bit less patience because you're in and out of trades. You're actively trading. You're the type of person that, I got to put on a trade. And that's okay. That's okay so long as that you're managing things accordingly. But you got to remember that you'll probably have smaller losses and smaller wins. And that is simply because if you're trading for a shorter period of time, stocks can only go up for so long. Whereas if you hold them for a couple of days, weeks, or months, they can go up for a lot longer period of time. So you need to find your balance of what's working for you. And of course, you can do both. You can use convergent and divergent strategies within your account. But typically doing both at the same time until you've mastered one or the other, or at least have a consistency with one or the other, is a very bad idea. So what you want to do is figure out which one works a little bit better for you. Go to the extreme level, do a little bit more high frequency things. And if you're feeling a little more emotional during that trading, then go ahead and attempt the divergent strategy. Buy it lighter, wait for things, be a little more patient, and see which one works for you, which one works and fits your personality type a little bit better. It's kind of like playing matchmaker. So you have these two concepts, and these are the core foundational concepts. And then you're trying to be a matchmaker to see which one you get along with, which one is going to be your lifetime partner in the trading world. And that's what you're doing. Now, from here, you start getting into, again, other little strategies. So you'll have a multitude of strategies from both of these in the way that you want to trade. So there's sub-levels beyond that. And you can do things in all sorts of ways in creating your trading system and creating your trading style. But this is the core. This is the foundational level. And once you get this part, now you start tweaking that strategy. You start looking at other things. You start looking at, am I more of a person that's looking at fundamentals? Am I looking more at charts? Am I looking more at, the momentum or the health of the market? Am I playing it based on a pattern-based system, like when stocks gap up? Or am I playing it based on maybe a trend system where you see a trend continuing time and time again, like 3 up days, and then you'll go in and play that stock? So again, you're looking at all those things, and then you'll fine-tune those things. But first, you need to understand which one's fitting you and your personality type better. And you're really kind of choosing which one suits you the best for your trading appetite and your trading style. And once you have that, you can, of course, go ahead and implement and use the other one depending on market conditions and so forth. But you don't have to. If it's not working out for you, then just stick to your core, stick to your strength, and do what works. All right, so I hope that was helpful. As you can see, I take things to that foundational core level. And I like doing that in order for you to really see things from another perspective. Because if you understand the basics, the foundation, the fundamentals to how things work and operate, it'll allow you to start breaking things apart and putting things together for what works for you. Because it's not about me, it's about what's working for you. So you need to find what personality type fits with that trading style of yours. And once you have that, then you'll be able to stem and say, okay, this is working for me. So now half of those other strategies you can eliminate. You can now focus on these other half. And that really just simplifies things a lot more. And now you start breaking that apart into another level and another level. So quick little example here further. So if you take this 80-20 principle, or let's just say this halfway point. So here we had convergent and divergent, okay? So you can think of this also as an 80-20 principle where, 80%, 20% Pareto's principle. In either case, here we have convergent and divergent. So now you take one that works for you. So if you take this and now break it apart, so now you get all your divergent strategies. So that's what this is. And now again, you start breaking this apart on what works over here. Okay, so this might be a pattern system. Okay, so now you break that apart and that gets even smaller. Okay, so you just continue breaking that down further and further until you get a little box that's tiny. It might not even be that tiny. It could be even just a little tiny box right there. And that's what works for you. And if that's what works for you, Just keep doing it over and over again. That's really what you're trying to do, is you're taking that subset, that core, breaking it down further, and continue doing that. And the same thing with this 80-20 rule. You keep moving until you get to that 4%, that 2%, 0.5% of what's really working for you, your core. And that's really what I wanted to share with you, is that it's not really just about showing you a system that's golden, a system that works, that you can go ahead and buy your fancy house or whatever, because all these systems, all these different things, they all work. Everything really in the market works, because you could be a bear and make money, you can be a bull and make money, and you can even be non-directional if you're trading options, and you can still make money. So you can have no opinion on the market and you can still make money. But the important part is you relate to the system or strategy that works best for you. You know, if you're constantly trading in a style and a system that's not working for you, then you're not going to be successful. Okay, so for example, people who are day traders, there are day traders that are successful. Yes, there are people who trade Forex that are successful. There's people that trade options. And you might be wondering, well, which one should I trade? Which one makes more money? It depends on what's working for you, because an option trader is going to be a little bit different mentality than a Forex trader, and it's going to be different than a day trader. They all have a little bit of a different risk profile, risk tolerance, what appeals to them, and that's why they're trading the way that they're trading. And that's what you need to do, is you need to figure out what's working for you. And now that you've chosen, let's say, stocks and options, which is actually the core for me, so I would assume that you're watching this because you're interested in stocks and options. Now you start looking at your strategy-specific system. Okay, so do you want Divergent or do you want Convergent? Okay, then you choose, then you go to the next level. Then what do you want? Okay, from there you choose one or the other. Okay, you take that, you keep breaking it apart, and you keep breaking it apart. And then you fine-tune that strategy and system that works for you, because you're either, you know, a turtle or you're either a rabbit, like a hare. And those are completely different animals. They operate and work in a completely different way. And yes, you can be sometimes a turtle and sometimes a rabbit, depending on market conditions in the environment. If you can transform and do that, that's really good. But for some people, if you just can't do that, then stick to your core, stick to what you are, and do the thing that keeps working. So I hope this video was helpful. Thanks for joining me, and keep your eye out for that 20 Rules of Investing Success for that book. And it should be available actually today if you're watching this video on Friday and you're not watching it on the Thursday where I'm recording it on the Thursday. So then just go ahead, take a look at Amazon, and it should be free. And, you know, I'll also send out an email along with that where you can get that link probably on that Friday or Saturday as well once it's up. So that way you get notified. And if you're not on the newsletter list, get on the newsletter list so that way you can be notified when I release other free training, free goodies, just like these books. Thanks for joining me. In the end, remember, do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.